Good morning, everybody. It is March 11th, and we are going to start our prep for today. First, a quick reminder that derivatives trading is inherently risky and past performance is not indicative of future returns. So we'll start off here with the ES today. We are looking for rotational price action from this 56.15 up to this 57.40 area, and our line in the sand is at 57.19. Our pivot inside of this zone is right here at 56.78. And if you're following along with the cursor on the left-hand side here on the TPO, you can see that our pivot is right where our systematics go from being a buyer to a seller today. And our rotational low is right where we go from our biggest buying of 3 billion and begin to cut into that 2 billion. And again, our lower pivot is going to be at 55.44, which is where we'll bring in a lot of selling. And if we look at our market makers and their large positions, we are looking at this 56.12. So right at our rotational low is their largest position. And then up at the line in the sand is where they have their second largest. And this 56.63 will be important. It's right where our systematics flipped from buyers to sellers, and that is yesterday's value area as well. So those two confluence points will tell us that this 64 is well we want to pay attention to. Now, this is our minor line in the sand here at 57.19. Our major line in the sand is way up here at 59.76. So it's still going to be that higher volatility regime. And when we check our risk settings here, our system's been picking up when it's been the best time to go long in this little bit of a move versus when it's better to have been looking short. Now you can see the difference here. We were in our downside starting, telling us to be ready for more and more volatility and downside, whereas now we are in the late stage, so we're looking for that capitulation kind of moment. And we can look at this on other instruments as well, but let's finish up here on the ES. So when we look at our systematics, and we talk about this often, they're down to 50% invested. We talk about their flows every day because their flows directly affect the market. And if you look, today is really the last day of buying. Tomorrow for CPI, Thursday for PPI, Friday, they're going to be net sellers. And then next Monday becomes a favorable day again. So we can already see that, and we can look at they were nearing that 100% invested mark when we were back at all-time highs around the 97 percentile. Now they've sold half of their positions. So this is what we watch for when we run out of buyers in the market. And we will watch how much selling will come in from those buyers. Now, onto our insurance for today. We do have that insurance. We looked last week and we highlighted this that we were underinsured for Jolt, CPI, and PPI, and we were looking for that push higher. And yesterday, again, nobody wanted to buy the insurance on Friday ahead of the weekend. So yesterday, we saw all of those insurance flows coming in to elevate the market on these and again bring in a bunch of demand for that insurance. So now that we are insured, that tells us what we need to know for the data when it comes out tomorrow. And it's the same thing we saw last week on NFP. We laid it out for our students that it was a 75% chance that the high after that NFP release was going to be the high of the day, and that was going to be your best short of the day. And it worked out very well for many of our students for 60 to 80 points. So let's move on now. We usually don't go into other instruments, but today we will. So let's take a look here at gold. And again, if we look at our risk assessment, gold has been in a strong uptrend. Then we get into our late stage uptrend where we can start looking for the market to find a top. Now we started our slight move lower, and now we're back to neutral. And if we look at where we are in terms of our levels, we are looking for a rotational price action from this 28.93 to 29.32. And that is going to put us inside of either yesterday's value or 2 to 3 days ago value area high. And that's where we're going to be in terms of value. If we get outside of this 29.32, then we're going to look for new all-time highs at 29.73 and our weekly highs closer to that 3,000 mark at 29.98. And our pivots are 29.13 and 29.47. Downside pivot is 28.73. And if we want to go here to the NASDAQ next, because I know that a lot of you like to trade the volatile instruments. So on the Nasdaq, again, we have been in that late stage downside. Yesterday, telling us to look short, all day, that's going to be the better move, and hopefully you were able to catch a lot of that. You can see here that we have now reclaimed our small minor line in the sand this morning, and our major line in the sand is up at 21 or 20,100. And this is pretty much bookending our rotational levels from 20,050 to 19,387 with our pivot at 19,708. Now, for our market makers on the NASDAQ here, their largest positions are at 19,691, so right at our pivot. And then right at Globex low, we have our largest position overall at 19,139. If we break that, then 18,900 is a very quick and reasonable target. If we hold, again, that's going to be where the biggest defense is coming in. Other areas to pay attention to will be this 19,600, where we first begin to see an offer come in, and that's about where we've pushed up to in Globex. And then we'll look at the next offer at 19,638, and then we get into that pivot level. So NASDAQ is favoring a little more downside, but it's late stage, so we are waiting for the market to turn, and there's signs that we could be nearing a short-term bottom ahead of CPI, and mainly with our systematics, because they will trade the same components of the S&P that are in the NASDAQ as well, because there's a lot of overlap between the indices. We can see this large buying today that we normally see as supportive and kind of containing that market. That is likely going to play out on the NASDAQ as well. Now, lastly here, if we go to oil and we want to take a look again, our system picks up when we want to be looking long, when we want to start transitioning to shorts. And the biggest sign on oil is our line in the sand. And we don't give this out very often, but when we break the line in the sand, within a day or two, we usually see a $2 to $3 move on oil back up to the upside. And so we broke that yesterday, and now since we've gotten back over it, we've already made over a 1 point move back up. And that's what we look for, because it's very rare and unlikely that we break our line in the sand on oil. It only happens a couple times a year, and when it does, it's the easy money that is just laying in a corner for you to go and pick up. So we are looking for rotational price action from 65.80 to 67.50 with our pivot at 66.50. And our upper pivot is 68.27 and 68.90. And our lower targets, if we break this 65.66, again, we can make another day or two move lower, but underneath that line in the sand, we always see that upside move, which is what we've gotten for the de-risking. And we will monitor this as it changes through the day, but 64.80 and 64.35 are your lower targets. So that gives you four of the major indices that most people trade. If you want to learn how to do this for currencies, for natural gas, or any other instrument, we do this also for equities and use all the same tools in monitoring them. Check out our Discord rooms. You can also, our courses are just starting, but we will have new courses starting in the fall. So have a great day, everybody, and stay safe trading out there.